Thanks,
We're on
man.
live. Let me check for live.
We can't pin.
We're live.
All right, we're good to go.
Angelo, how are you?
Good, how are you?
Good. We're joined this evening. We've got our special guest, the guru of Go, the king of finance, MARC Conway with us.
Yep.
And we're going to be touching on no loan for you or yes loan for you. Mark, can you hear us there?
Yes, I can hear you. Thanks for having me on the show.
Pleasure. Thanks for joining us. I guess right now, a lot of people are wondering what's going on, not only in the world of real estate, but the world of finance. And, we are seeing phenomenal buying opportunities out there. But as somebody who's maybe thinking this is a great time for me to take advantage of a property market, obviously the first steps are talking to someone professional like you. Can you give us just a quick, maybe a 2-minute wrap of how the last 8 weeks have been in the world of finance for you?
Sure, yes, I can. So the last 8 weeks have been challenging, to say the least, primarily from the borrower's perspective, depending on what industry they work in.
Yep.
So people in hospitality, travel, tourism, parts of public service that might have closed down. So a lot of people's income are affected. And the JobKeeper payment is not enough to service a loan, even though some banks will use it. Because even though you get $1,500 a fortnight, that's gross, and you get taxed from that as well. You can literally borrow, 100, 200,000 based on that kind of an income level. So people's jobs and what's happening in the industry that they work in are the biggest catalyst that I'm seeing at the moment, coupled with people with businesses, so all the self-employed people out there at the moment. And then the bank's asking for your most recent BAS as well. So even if you've had a slight downturn, the banks are now looking at it from a worst case perspective. So this is the hardest landscape we've ever seen.
Yeah,
now, some banks are doing repayment holidays, extending interest-only periods. So they're doing their best to help out, but they're also making sure that they're trying to lend responsibly, which is tough as we're only 2 months into this pandemic.
And we're not seeing a lot of, especially a lot of the first home buyers at the moment that are still looking. It doesn't seem that there's been too many that are struggling to get loans from what we see.
They are. And also, the first home buyer scheme is nearly full. So the major banks are full. A lot of the mortgage managers and second-tier banks have got an allocation of spaces, and those spaces are now have been taken up. So there's a lot of people out there that didn't have money for stamp duty, maybe had a 5% deposit, earned 50 to 100 grand a year, were a good candidate for a home loan, but those first home buyer spaces are now taken up.
Okay.
So very challenging.
Is that to do with the 5% stand that they're actually helping out at the moment with the, because I know with NAB and CommBank, from what I hear, they're the ones that are mainly helping out. Is that right?
Well, they're the only two major banks that were on the panel. The rest of the banks are quite small, and a lot of people haven't heard of them. So those smaller banks were taking 2 and 3 months to get into the application queue because you needed to be allocated a space for the first home buyer scheme. Now, all those spaces are taken up, so now we need to revisit this next year for some people as well.
Yeah, nice.
Okay.
Yeah.
So look, if I can ask it this way, Mark, if I'm a first home buyer and I'm coming in now to buy a property, not a new property, but my first home, I want to borrow 500,000. What does the bank want to see from me? What do they want me to look like in their eyes? What do I need to have for them?
That's assuming that you can't take advantage of the scheme because the spots are all taken. That means you can do a 95% loan, but the mortgage insurance is on top of that as well. So your base loan is around 92 or 93%, which means instead of a 5% deposit, now you need a 7 or an 8 or a 9% deposit to get into the market. So that's a mortgage insured loan.
Yep.
You still need to service the 95% that you were looking at in the first place as well. So to borrow for $450,000, $500,000 a year for the home, you still need to show income of around 80 or 90,000. You can borrow at 5 to 5.5 times income comfortably.
Right.
Okay.
So
and with commercial, I mean, Michael had a question in regards to he found out here, or he's informed by a client that some lenders are offering commercial loans at cheaper rates, and cheaper rates, and even some residential loans. So have you noticed anything like that at all?
So no, I've never seen a commercial rate cheaper than a residential rate. The cheapest residential rate is 2.09%.
Wow.
That's right, 2.09. The cheapest commercial rate is 3.5% to 4%. So there was a big gap. Commercial loans are always priced on the loan to value ratio as well, and it's a much bigger and a different animal to residential lending.
And what are you finding at the moment? Because I mean, we've realised in the last year they have taken the handcuffs sort of off where how tough it was, I guess, in 2018 to get at the moment. I mean, we are finding a lot of people out there at the moment finding it a little bit easier to secure loans than what it is. I mean, we only see who are finance approved, and a lot of the buyers that are at the moment are there. What are you seeing behind the scenes? I mean, out of, let's say, your 10 applications that you might put forth for, what's your average? I mean, are you getting 3/4 of them across the line? Like, what are you seeing out there?
So I'm getting probably about 95 to 98% of my loans approved at the moment. The reason why we're still quite high with our conversion ratio is we're strategizing and planning quite far ahead. We always make sure that we collect everything that the bank wants, and even a few things that they might ask for. And if someone's self-employed or in a risk industry at the moment, we're having a lot of preliminary discussions before we get to the application stage. So we're not going in blind, we're well prepared.
Okay.
Yeah.
Okay. Mark, can I ask you, if I am a first home buyer, I was fortunate enough that this economic environment for the last kind of 8 weeks did not affect me. I'm still earning the same income I was. I've got a 10% deposit. Have my chances improved, or they're tighter on me still?
So every bank has a list of COVID-19 questions, and the person who puts the application together, whether it be the mortgage broker or direct in the bank, you have to answer those questions. Now, some of those questions are quite common sense based. If my payslip from my current job was issued within a week and the income is exactly the same as it was 2 or 3 months ago, logic would dictate that I'm unaffected. But some banks will still require a letter from the employer to say that over the next duration, 3 to 6 or 9 months, that current situation won't change.
Okay.
So there's a little bit more scrutiny around it, which is why when someone comes to us for a loan, we always make sure we ask enough questions. That way we're well prepared for what the bank's going to ask for. Because there are a lot of common sense questions, and then there are just a lot of box ticking questions that the bank is forced to ask.
Yeah, got you.
And are you seeing a lot of first home buyers as well taking advantage of this, the 5% at the moment?
So in our business, not as many, but I have heard in the market that there are quite a few people taking advantage of that scheme. I find sometimes those people think that they can get into the market, but their income just isn't strong enough.
Yep.
So even though the government's going to guarantee that extra 15%, so you don't have to pay mortgage insurance on $50,000 or $60,000 a year, you're a little tiny bit short of becoming a homeowner unless you've got a huge deposit.
Yeah.
So there's a lot of income-based questions as well as cash and what strategy we're asking for the actual application itself.
Okay. So, sorry if I got it wrong, Mark. So basically you're saying that part of the criteria is also forecasting what the income's going to be. Is that right? Did I understand that right? Maybe I didn't.
No, as in at the moment, if you've got to get into the home market, you need to earn 80, 90, 100,000 a year. That's your first stepping stone to get into the market, because especially in the Northern Beaches, the cheapest property is probably 600,000, maybe something with a 5 in front of it.
Yeah.
And generally those people have got a 5 or a 10% deposit, which ballpark is your 450 to 550 loan. Now, to service that kind of a loan, you need a minimum income to get across the line. So even though these people are being sold the dream of you only need 5% to get into the market, they're not being told in advance, by the way, we need to check your income before you start to get excited about this potential purchase.
Okay. Yeah.
Okay. Good to know. Good to know. Sorry, I had a question now. It's totally slipped my mind.
That's all right. It's all right. Well, it's good that, I think the motivation at the moment out there as well is, we've noticed a massive amount. The reason that it's all around first home buyers is, being in DY with the amount of units here as well, but we're finding most of the people had that cut off at 700,000. The reason being is because they've been going down that sort of path where they had their approvals through either NOB or CommBank, but I mean, overall, it's a good incentive itself out there, but I think it's we're finding, you know, that there's good values in the properties around that 750 to 800,000.
Yeah.
If someone can not go through
Right.
that.
And what these people need to do is they need to start to plan ahead. So they need to understand where do they sit at the moment and what can we do in the next 3 to 4 months to get them to maybe a better property if they're a little bit short at the moment. So now some of those properties that were unaffordable or unattainable for a first home buyer 6 to 12 months ago, now they're on the market. And you are correct, around DY, there's obviously lots of good value for money properties. And people just need to plan that little bit more ahead just to see if they're a candidate to get into the market.
I think that's great advice. I think that's fantastic. Like, even if today it might be a little bit tough to speak to somebody like you, Mark, and say, look, what do I need to do over the next 3 months to be in a position? Because honestly, the property market, even on our side, the media is telling you one message. Yeah, look, we've seen more buyers out over the weekends, but where's it going to go? It's still probably going to be a great environment to buy in the next 3 months as well.
Exactly. And now you need just a little bit more time to prepare. Your application used to take 1 or 2 or 3 days and now can take 1 or 2 or 3 weeks, depending on where you go. So now you need to get all your ducks in order, get well in advance, get a fully assessed pre-approval, not just a system-generated approval, which doesn't mean anything. Make sure you're risk-free ready. So when customers talk to you, they can actually make a firm offer.
Yeah. Now, a question I've been thinking about, and this is now just actually going through COVID-19, and we're getting back into things now. I think at the moment where we're starting to see, and a lot of speculation is where the market's sort of heading in regards to prices, and a lot of that is because of getting money from banks. Yes. Now, let's say you're in the situation where for the last last 2 months, but let's say you're still out of a job and you're probably not getting back into workforce for another month or two. What's going to be required, do you think, getting a loan approved? Because I know that a job seeker and job keepers and all that, the banks, from what I've heard, are not using that as part of getting your loans approved, or you almost have to start again. Do you have to sit through another entire year now before you relook at getting a property after the next financial year?
So that's a very interesting question, that one, because a lot of those people that are now out of work, if they have to start work again in a new job, they're not going to pass the 3 to the 6 months minimum employment to get a loan. So that's all about making sure that it's as less risky as possible, and just trying to plan that little bit further ahead. Because when they start this new job, they could very well be on probation as well for 6 months. So these people need to really, if they're out of work and they've got something coming up, we might need an employment letter to say that they're not on probation, and we might need at least 3 or 4 months before we can even consider putting an application in. That's because we don't know how the banks are going to treat an application in September, October, November this year.
Yeah, but let's say you've stood down from work and you're able to get back to again. Obviously, when you talk about probation, does it come down to if let's say your employer takes you back and you continue your old job?
That would be fine. So if we can show consistency and the same with income, then we'll get over any hurdles that the bank can throw at us.
Okay. Good.
Yeah, good. I had a question as well, Mark. So if I have been working, I had prior to this this COVID-19 situation, and then I went on to this this assisted income. JobKeeper. And now I've come back to work and I'm back into a routine and the income's the same. Is that period that I've been on the JobKeeper, is that viewed in any way by the banks? Is that going to affect my ability to get a loan, or?
Not really, because they're not discriminating against people that were stood down, which is not their own fault. If they go back into the same line of work on the same income, you would stand a very good chance of still securing the same loan, because you'd be able to show consistency.
Yeah, okay. Yeah, that's good.
Yeah, and that's all the bank wants to see is, are you consistently employed at the same income levels that we would like to use to service the loan?
Done. And someone that's been in the game for a while, what are your thoughts out there? What are you seeing? Obviously the industry's changed in somewhat ways. we feel in a way it's been, I wouldn't say it definitely was not normal, but or normal is definitely not the word to use, but in regards to like, we still had a bit of consistency where, yeah, there might have been a couple of weeks where we had a lack of activity because of the minute COVID-19 and a lot of the closures happened, but then everything started to tick over and the prices shifted a little bit. But at the end of the day, a lot of properties were selling and everything was still moving along. What are you noticing on the finance side? Are you noticing like the same amount of transactions or less? Or
so we're doing quite a lot of refinancing at the moment. Money's cheap. A lot of people are coming off a fixed rate that they got in 2017, 2018, when a 4% or a 4.2% was a very good deal. A lot of those people now that are still gainfully employed and haven't had an income drop are able to take advantage of that. So, and a lot of our clients as well are not affected. If I have to be brutally honest, I haven't had a lot of people that are affected by COVID-19 yet. And if we have, those applications are on hold just for the time being until we can sort out their income to make sure that we're not putting them in a bad situation in the foreseeable future.
Yeah. Okay. Where are you seeing rates? Where are you seeing? Well, what do you see in the future? I mean, we've spoken to others are saying. I mean, there's a bit more room as well in regards to possibly popping down over the next couple of months.
I don't think we're going to see any more rate cuts.
Yep.
The Reserve Bank governor said he's not a fan of a 0% cash rate. Yep. There's a gulf in the difference between a fixed rate and a variable at the moment. I think that we will see rates increase soon as banks claim costs of wholesale funding and challenges in the workforce inside the bank to keep not only the people's extension on interest-only loans happening, the small business funding that the banks are doing as well, the repayment holidays. These are all taking quite a lot of staff in the bank's time. I foresee that there will be some small, very incremental rate increases coming up. I know ANZ lowered some fixed rates but increased a few of the other ones today, as an example, just to do a little bit of balancing of their loan book.
Fair enough. Yeah.
Okay. Mark, can I ask? I don't know how to word this correctly, but you see obviously a lot of different applications from a lot of different people in a lot of different situations. Do you see is there any maybe any demographic or any kind of percentage in the marketplace that right now it's offering really good value? Like, is this a great time to refinance? Is this a good time that if I'm equity rich to look at doing something differently there? First home buyers, I know we kind of touched on a little bit. Is there something that you can see in today's market that might not have presented itself as a benefit to somebody maybe say pre all this kind of activity?
Yeah, I think that the refinancing is a big one at the moment. For people that have still got strong income, they can secure rates that they haven't seen for a while. I think that there's a little bit of risk in the purchasing environment, but when you're well prepared and you can make a strong offer for a property and you can talk to a real estate agent and give them your honest best offer, I think that that's a little bit different than before because now you're not up against so many purchasers.
Yeah, right.
So you might be able to secure the property that you really wanted rather than missing out to 5 or 6 other people and having your offer shopped around.
Yeah. That makes sense. Yeah. Okay. Cool. Okay. And I think I'm out of questions. Ange, what about you?
Yeah. No, it's
sorry, mate.
Go for it. That's right.
I was going to say, just to recap. So if I'm going for a loan of say 700,000, I need to have 10% deposit.
Ideally, that would be great. Because that would be a 90% loan plus mortgage insurance, which would take you to 92, 93%. So a little bit under that maximum, the 95. Banks don't really want to see 95% loans if they can avoid it because that's the highest risk category you can be in.
Gotcha. Okay. So hopefully a little bit more than your 10% deposit.
Yeah.
Still a steady stream of employment or income.
That's right. No massive expenditure as well. So making sure that your bank statements look as clean as possible.
Yeah. Okay.
Because that's really down on your expenses.
And if you're meeting those criteria, the chance of getting your approvals for what you're hopefully going for should be pretty good. Is that right?
It should be pretty good, yeah. With a well-structured application and making sure we've got enough time, you should stand a good chance of getting an approval.
And our advice then to anybody who's found it a bit tougher, that like Angelo said, that's lost maybe employment for a short period that are coming in, basically come and speak to yourself.
That's right.
Let's develop a plan. Sorry, can you hear me, Mark? Sorry,
yeah, I can hear you. Yep.
So I was just saying, and for somebody that might have lost their job or they're in a tougher spot employment-wise, would it be right to say, look, come and speak to you and say, look, let's develop a plan. So although we might not be in a position today, let's work to be in a position in, 3 months' time.
In 3 or 4 months' time, right? Because we're all, Sydney is opening up at the moment, so this thing won't last forever. Now it's a good time to plan ahead.
Yep. Yeah, cool.
Yeah, fantastic.
Lovely.
Thanks for jumping on board tonight.
Yep.
Thanks for having me, guys.
Marky. So Mark's a long financial. He used to work with us actually for quite a few years out of our office here, and he's looked after a lot of our loans, and we had to cut quite a few off the plan developments over the years, and there was quite a few people and a lot of strife, and Mark came to the rescue for a few of those, quite a few of them actually. So he's the
man to talk to.
That's right.
Mark, thank you. Thanks for joining us. Love your jacket as well.
Thank you very much.
Looking very sharp.
All right.
See you, mate.
Good evening.
Thank you.
Thanks, mate.
Thanks, Mark. I think that's it, Ange.
It sure is.
Guys, thanks for joining us, and we'll catch you soon. Thank you.